is the market share of the legacy banks going to get trimmed a bit because of this huge digital challenge which may come from NBFCs riding on the bank of digital India, say a UPI or an Amazon, anybody else's digital platform?
We have to see that, but from my side, we are not fluttered about all of these things. The reason being that, in some sense for us, the fintech companies are going to provide ready-made technology, which probably is going to take for us to evolve a lot more time. And plugging into them and working together probably makes a lot of sense. We bring a lot of customers to all the fintech companies. We provide funding for them. In some places, equity funding is being done. So I think a fintech world without a bank probably would be finding it very difficult to exist. So the question is to find the right kind of collaboration and the right kind of format to work together and not be too perturbed by it.
Mr. Bhattacharya, Nandan Nilekani gave us that hope. The WhatsApp moment for the Indian financial sector is here. And Mr. Shivaji is also touching on that. More data will be available about SMEs. How far are we from that moment when all transactions will be done on a UPI? Are the apps in UPI around the corner? A year from now, 2 years from now, will we have enough data on the UPI about an SME so that he can be given almost algorithm-based lending? If his electricity bill is so much, if his telecom bill is so much, if his inventory or tax bill is so much, he qualifies on the net, on the go for a loan.
Well, I think what Mr. Nilekani is saying is actually true. As you know, we have this tie-up with Uber. And when we launched the Uber tie-up, we gave 61 loans in 27 seconds, which even the Uber Asia Pacific head confirmed was the best timing globally, okay, for giving of loans. So I don't think, that the moment is to arrive. The moment is here. But if you really want to see volumes pick up on these areas, it will obviously take time because, as you say, you have to have the utility bills. You have to have the authorities taking taxes. You need very many other data that this particular person is using or is actually generating. So you need all of these various organizations to collaborate in order to create a better digital picture of the person. So I think digital is here to stay. It is the future, and the quicker all of us accept that and prepare ourselves for it, the better.
So what timeline will you give? Do you see a scaling up, a paradigm shift in 1 year, in 2 years?
Very difficult again to really predict it. I would say around 2 years, because I still believe that, all of these organizations need to come together.
We are having a trend of a lot of liquidity in the system. And Mr. Bhattacharya, you raised the issue that the FCNRB will take away 25 billion or 26 billion of deposits out. Should we expect a seminal change in lending rates after that?
No, I don't really think so. I think, lending rates will be a function of both liquidity as well as credit demand. Now, I really do believe that unless and until credit demand picks up, because the banks at this point of time, I don't think they are in a position to compress NIMs hugely because they have to make those provisions. Now, the only way that can happen is if you are seeing more volumes and therefore more income, which will enable you to support your bottom line. So I do believe that, demand will have a big role to play in the way the rates come down. But having said that, I still believe that there will be a slow coming down of rates. It's happening already. It isn't really catching people's attention because it's happening slowly. But having said that, it's definitely going to happen.
Do you see rates down by the end of the year, Mr. Shivaji?
Chances are bright. It may take place. If a one-line answer, yes, the reasons I can explain to you later. But I am hopeful that it will have a reduction.
Well, there are questions from the audience, so there will be more occasion to explain this. Mr. Tiwari, your guess? Money gets 25 basis points cheaper?
By the end of the financial year, yes.
Okay. Financial year. We got that. Mr. Jayakumar?
I'm hoping it does come in. I think so. It should.
No, I want a number and a date if you don't mind.
I think I think about 25 basis points I would certainly expect to come down. And if you look at it, certainly before the year is over. But a lot of things can change.
Mr. Agarwal?
Yes, I think directionally the rates should go down. In fact, because of the base effect, the inflation number coming ahead would be much lower. So I think directionally we are looking at rates going down.
So the new governor has a chance to cut rates once.
Yes.
Well, Mr. Sinha?
I would agree with Mr. Agarwal. So I think directionally it's come down, but I would assume it's marginal in the near term.
Okay. Shamiran, you have the last word.
RBI has to drop the reference of the term upside risks to 5% inflation by January 17. When that upside risk will be gone, I think about 25-50 basis point of rate cut can happen on the back of that.